It's almost hard to remember a time when talk of digital assets felt, well, kind of niche.
Hmm.
Now it's really front and center. We're seeing major institutions not just looking anymore, but making serious moves. It feels like the tide has really turned, doesn't it?
It really has. I mean, we've definitely moved beyond that, early adopter phase.
Yeah.
And what was once seen as purely speculative, well, now it's being integrated into the strategic thinking of some of the biggest players in finance. It's a pretty significant evolution.
And that's exactly what we're diving into today. We've got this report, the 2025 Institutional Investor Digital Assets Survey. It's from Coinbase and EY Parthenon. Think of it as like a high-level X-ray into where that institutional money is flowing in the digital asset space.
Yeah, it's a really insightful piece of work. They surveyed, 352 institutional investors, and these are the decision makers.
Yeah.
COOs, CEOs, heads of transformation.
The heavy hitters.
Exactly. And crucially, it's a mix. You've got folks already in digital assets, some who've maybe dipped their toes in before, and even those just planning their entry now.
Right. And the scope is important too, I think. We're talking about firms managing over $1 billion with a B's in assets. AUM, right?
Yep.
Mostly US and Europe based. And the survey itself was done just this January. So it's a very current snapshot we're looking at.
Precisely. And our goal today really is to distill this down for you, to go beyond just the raw numbers and pull out the key insights. Where are these institutions actually putting capital in digital assets? And maybe more importantly, why? What's driving those decisions? Consider this your fast track to understanding a really pivotal trend in finance right now.
Okay, so let's get into the big picture then. What's the overall temperature? Like, how much institutional exposure to digital assets are we actually seeing, according to this survey?
Well, the headline number is pretty compelling. As of January 2025, 86% of the institutions they surveyed either have current exposure to digital assets or are planning to allocate this year in 2025.
Okay, 86%.
86. It's a huge majority. And this isn't just like passive interest. It signals a real fundamental shift in how these major financial players view the space.
Wow.
It suggests digital assets are moving, from that speculative fringe maybe towards being a recognized component of diversified portfolios. Mm-hmm. And that has some pretty profound implications for market stability and future innovation down the line.
86%. That's staggering. It really shows how far things have come in, a relatively short time. I remember when the idea of any major institution touching this stuff was considered pretty radical.
Totally.
And this isn't just a flash in the pan either, is it? This momentum has been building.
Exactly. The survey shows that 85% of them actually increased their allocations in 2024. And a similar number, about the same percentage, are planning to keep doing that through 2025.
So sustained increases.
Yeah, that sustained increase really speaks to a growing conviction, I think, in the long-term potential here.
And the scale of these planned allocations isn't tiny either. I noticed a pretty good chunk are looking at putting a meaningful percentage of their total holdings into digital assets.
Yes, that's definitely a key indicator of their growing confidence.
Yeah.
You have 59%, nearly 60%, planning to allocate over 5% of their total AUM to digital assets in 2025.
Over 5%.
Yeah. And what's particularly interesting is that the U.S. respondents in the hedge funds, they seem to be showing an even stronger inclination towards those higher allocations. Suggests maybe a more aggressive or perhaps optimistic stance in those segments.
Okay, so they're not just dabbling, they're deploying serious capital. What's the why, though? What are the top reasons they're giving for jumping in?
So the number one reason cited by 59% is the expectation of higher returns compared to, traditional asset classes. That's a pretty classic investment thesis, right?
Sure, seeking alpha.
Right. And then right behind that, at 49%, is the opportunity to invest in innovative technology. And this highlights, I think, that they aren't just chasing price movements. They recognize the underlying potential of blockchain and digital assets to, disrupt and transform different industries.
That makes complete sense. It's not just about potential quick gains. There's a recognition of the fundamental tech shifts happening. And what was the third big reason?
The third big driver, mentioned by 41%, is seeing digital assets as a hedge against inflation. That narrative has been quite prominent, in the crypto world for a while. Mm-hmm. And it's clearly gaining traction now with institutional investors, too, as they look for ways to protect portfolios against potential erosion of purchasing power.
Interesting. So it's a mix. Potential for big upside, belief in the tech innovation, and a macroeconomic hedge. Okay. What about their outlook for the near term? Are they expecting this positive momentum to keep going?
Overwhelmingly, yes. 79% expect cryptocurrency prices to trend higher in the next 12 months. And the hedge funds seem particularly bullish in their predictions there.
Okay.
So that positive short-term outlook probably reinforces their current and planned allocation strategies.
And when they look out a bit further, say, the next 3 years or so, where do they see the best opportunities, like attractive returns relative to the risk?
Well, cryptocurrencies themselves are still seen as the front runner there. 68% identified them as the biggest opportunity over the next 3 years.
Still number one.
Yeah, significantly outpacing more traditional asset classes. U.S. equities came in second at 40%, and private equity was third at 38%. So it's a strong indicator of their continued faith in the growth and potential of digital assets compared to, the established markets.
That's pretty decisive. Now, something I found particularly interesting was the expected impact of the 2024 U.S. election. What were the main expectations there, specifically among the U.S. institutions?
Yeah, among the U.S. institutions they surveyed, the top anticipated impacts were increased investor interest, that was 60%, and increased investment coming from financial services firms themselves at 59%.
Okay.
And there was also a significant expectation, 47% mentioned this, for near-term regulatory clarity, like within the next 12 months. So they seem to see the political landscape as having a real, tangible, and mostly positive influence on the industry's trajectory.
So they think the political environment will actually fuel more growth. Interesting. And speaking of what could really move the needle, what do they see as the key catalysts for even wider adoption and growth in this space?
Number one catalyst, according to 57%, is greater regulatory clarity.
No surprise there.
Yeah, that's been a consistent theme, hasn't it? Institutions clearly view well-defined rules as just crucial for broader participation and, frankly, comfort. Closely following that, at 56%, is greater institutional adoption itself, which suggests a belief that, as more big players enter, it creates a kind of snowball effect.
Makes sense.
And the third key catalyst, mentioned by 43%, is increased consumer usage of crypto, like for everyday transactions and applications.
Right. So it's a mix of that top-down stuff like regulation and institutional validation, but also bottom-up drivers like actual practical everyday use cases. Okay. But with all this optimism, there must still be some headwinds, right? What are the main concerns for those who are already in or planning to get in?
Well, the top concern, cited by 52%, is the uncertain regulatory environment.
The flip side of the catalyst coin.
Exactly, which, as we just noted, is also seen as the biggest potential catalyst. Volatility remains a big worry, too. That's at 47%. And then the security of asset custody is the third major concern at 33%. All pretty understandable given, the market's still relatively young.
Absolutely. What about the institutions that are still kind of watching from the sidelines? What are their biggest reservations keeping them out?
Interestingly, their top concern actually mirrors the current investors,
Yeah.
that uncertain regulatory environment, again at 52%.
Still number one.
Yep. But their second biggest worry, at 41%, is different. It's the perceived lack of fundamental metrics for valuation. That's a common argument you hear against digital assets.
Right. The what's it really worth question.
Exactly. And thirdly, at 31%, they cite concerns about financial crimes and the potential for misuse in, illicit activities. So for those not yet involved, it seems to be more about those fundamental questions around value and risk, plus the regulatory ambiguity.
Okay. And just drilling down on that regulatory piece one more time, what specific areas are institutions saying need the clearest guidelines, like right now?
The survey points to three key areas where they really want clarity. The most important, according to half of them, 50%, is clear rules around crypto custody, how these assets are safely held and managed.
Makes sense.
Closely following it, 49%, is the need for a definitive classification. Are they commodities, securities, something else entirely?
That old chestnut.
Yep. And the third crucial area for clarity is tax treatment, mentioned by 46%. These are really fundamental issues that kind of need resolving for greater institutional comfort and participation.
Okay, that gives us a really comprehensive overview of the market sentiment, the drivers, the concerns. Let's maybe pivot now and talk about the practical side. How are these institutions actually, deploying capital? What are their preferred investment vehicles?
Well, currently, direct holdings of crypto assets, or these spot exchange traded products, spot ETPs are the most popular, held by 76% of respondents.
And just quickly, for anyone less familiar, a spot ETP is basically what?
Right, so it's essentially a security that tracks the price of the underlying asset, in this case, the crypto itself, but it trades on traditional stock exchanges. So it offers a regulated, familiar way to get exposure.
Got it. Familiar wrapper.
Exactly. And that preference for spot ETPs, it's expected to grow even stronger. The survey suggests it could increase to 87% in 2025. Investments directly in companies operating in the digital asset space are also significant. That was 51% holding those in 2024, and about the same plan for 2025. And stablecoins are another notable category. 42% held them in 2024, 43% plan to in 2025.
So definitely a clear preference for getting direct exposure, and increasingly through these regulated, easy-to-access vehicles like spot ETPs. What about the size of the allocations? We touched on the percentage of AUM earlier, but is there any more detail there?
Yeah, that trend of increasing allocation is definitely underscored by the fact that, as we said, a larger percentage plan to allocate over 5% of their AUM in 2025, reaching that 59% figure.
Right.
And like we noted, the U.S. respondents are showing a stronger tendency toward these higher percentages compared to their European and rest of world counterparts, suggesting maybe regional differences in conviction or perhaps regulatory comfort levels.
And how are these institutions thinking about digital assets within their bigger portfolios? Are they trying to slot them into existing categories or treating them as something new?
Well, a significant number, 44%, are now categorizing cryptocurrency as its own distinct asset class.
Okay, that's interesting.
Yeah, it's a really important development, I think. It signifies a growing understanding that these assets don't fit neatly into traditional boxes, like, say, equities or bonds. Recognizing it as its own category probably reflects a longer-term strategic view and an acceptance of its unique risk and return profile.
That feels like a key shift in mindset. Now, beyond the big two, Bitcoin and Ethereum, what's the appetite like for other cryptocurrencies, the altcoins?
Oh, there's definitely interest in the altcoin space. 73% of the surveyed investors currently hold altcoins beyond BTC and ETH.
73%.
Yeah, but the majority of those tend to hold only one or two others. Names like XRP and Solana get mentioned frequently.
So not super diversified into alts just yet for most?
Not broadly, no. Although it's interesting to note that hedge funds seem to be leading the way in altcoin holdings, which could indicate, higher risk tolerance or maybe more specialized trading strategies within that group.
Okay. And when it comes to actually getting exposure, what methods do they prefer? Are they happy holding the coins directly, or do they lean towards more structured products?
The survey shows a pretty strong preference for exposure through registered investment vehicles. 60% favor that approach.
Right, back to the ETPs and funds.
Exactly. It highlights the importance of regulatory oversight and just familiar structures for these institutions. And there's also significant interest in new products coming down the pike, particularly diversified index funds, tracking a basket of cryptos, and if regulators approve them, spot ETPs for altcoins. That would likely broaden access and appeal even further.
That makes sense. Regulatory comfort, diversification seem to be the recurring themes here. What about more sophisticated strategies, like using leverage to potentially boost returns? Any preferences there?
Yeah, for those institutions considering leveraging their crypto exposure, the preferred methods seem to be diversified market cap weighted index funds traded on margin that was 56% and crypto options at 55%.
Okay, so established tools.
Right. It suggests a relatively cautious approach, favoring broader market exposure and these established derivative instruments over, say, potentially riskier strategies like margin trading individual, maybe less liquid crypto assets.
Sounds like even when thinking about leverage, they're prioritizing diversification and more established financial tools. Now, we're seeing a lot of traditional asset managers taking a closer look. What are their plans when it comes to launching their own crypto funds?
Well, the survey indicates nearly half, 49% of asset managers are considering launching crypto funds within the next 2 years.
Almost half.
Yeah. And the main focus for these potential new products, it's on Bitcoin ETPs. 60% of those considering a launch are targeting that specific type of fund, followed by Ethereum ETPs at 56%.
Makes sense.
It aligns perfectly with that strong institutional interest in the two flagships and the preferred ETP structure for getting access.
It seems like a natural progression, offering their clients access through familiar fund structures. Okay, finally, in terms of investment use cases, what's the interest level in tokenized assets? Things like tokenized bonds, equities, real estate, moving beyond just the traditional cryptos.
Oh, there's significant and growing interest there. Over half, 57%, are interested in investing in tokenized assets.
And what's driving that interest?
The key drivers seem to be potential for portfolio diversification. That's 65%. The ability to offer fractional ownership, which could lower investment minimums. That's 48%. The prospect of faster trading and near-instant settlement, 42%. And access to entirely new types of assets that were maybe less accessible before, that's 36%.
So lots of potential benefits.
Definitely. And importantly, 72% of those who are interested plan to make their first investments in this space by 2026. With things like alternative funds and commodities being the most popular initial targets for tokenization, it really hints at a future where a much wider range of assets become more liquid and accessible to blockchain.
That paints a really fascinating picture of the future of asset ownership and trading. Okay, let's shift focus slightly now, maybe to DeFi, stablecoins, and the broader utility beyond just investment. What's the institutional appetite for actually tokenizing their own existing assets?
Yeah, it's interesting to see that 40% of the asset managers surveyed expressed strong interest in tokenizing their own assets.
40%. And why would they do that?
Well, the main motivations seem to be the potential for instant settlement of transactions, increased liquidity for assets that are traditionally less liquid, and that ability, again, to offer fractional ownership to a wider range of investors.
And what kinds of assets are they thinking about?
The top asset classes they'd consider tokenizing themselves are alternative funds, public funds, and real estate. Suggests a desire to unlock value and improve efficiency in those specific areas.
So they're not just looking to invest in the tokenized future, but maybe actively participate in building it. What about direct engagement with decentralized finance DeFi protocols?
Right.
The platforms offering lending, borrowing, trading on the blockchain. Is that on their radar?
Oh, absolutely. The survey points to a really significant planned increase in DeFi engagement. Currently, only about 24% engaged directly.
Okay, relatively small now.
Yeah, but that figure is projected to triple to 75% within the next 2 years.
Triple. Wow.
Yeah. And notably, the U.S. respondents are showing particularly strong plans for future engagement in this, rapidly evolving space. It's a massive jump, indicates a growing comfort level and understanding of DeFi's potential benefits.
That is a dramatic increase. What specific DeFi use cases are grabbing their attention?
Among those already involved or planning to get involved, the top interests are derivatives offering new ways to manage risk or speculate. Staking, allowing them to earn rewards on their holdings.
Yield generation.
Right. Lending and borrowing protocols, also for yield opportunities. And gaining access to a wider range of altcoins that might not be on the main centralized exchanges. So areas that offer potential for enhanced returns and, more efficient capital deployment.
But with such a big planned jump in DeFi use, there must be some hurdles for those who aren't yet participating. What are the main barriers they mentioned?
Well, the primary barriers for those with no current plans to use DeFi are, surprise, surprise, regulatory issues, cited by 57%.
There it is again.
Yep. And compliance risks at 55%. Also, a lack of internal knowledge and expertise in actually navigating the complexities of DeFi protocols that was mentioned by 51%.
Right.
So these concerns really underscore the need for, greater regulatory clarity again, but also maybe more education for wider institutional adoption of DeFi to really happen.
Those concerns definitely echo the broader regulatory themes we've been hitting throughout this deep dive. Okay, finally, let's turn to stablecoins. What's the institutional perspective on their use and potential?
Very strong interest here across the board. 84% either currently use stablecoins or are interested in doing so.
84%.
Yeah. Interestingly, hedge funds show particularly high current usage compared to other types of firms.
And what do they want to use them for?
The top use cases of interest include yield generation through lending or staking stablecoins, their transactional convenience, using them as a stable intermediary when trading other digital assets, and their utility in facilitating foreign exchange transactions. So it highlights the view that stablecoins are more than just like a stable store of value. They're seen as pretty versatile tools for generating returns and improving operational efficiency within the whole digital asset ecosystem.
So a really diverse range of potential uses for stablecoins in the institutional world. Well, this has been an incredibly insightful exploration of this 2025 Institutional Investor Digital Assets Survey. To kind of bring it all together, what are the main takeaways that really stand out for you?
I think the overarching narrative is just one of strong and actually accelerating institutional adoption of digital assets. We're seeing significant capital allocations planned for 2025, driven by that expectation of attractive returns, but also a real belief in the transformative power of the underlying tech. And that anticipation of clearer regulations is just a huge factor, expected to really fuel this growth further. It feels like it's no longer a question of if for many of these big players, but more how much and how soon.
Yeah. And it's fascinating to see how the interest is really expanding beyond just Bitcoin and Ethereum. There's a clear trend towards diversification, right? Growing interest in planned investment in altcoins, exploring the potential of DeFi, the utility stablecoins, and especially those exciting possibilities around tokenized real-world assets. It really signals a maturing market that's exploring a much broader range of applications.
Exactly. I think institutions are moving beyond that initial, maybe purely speculative phase,
Yeah.
and are now looking at the entire digital asset ecosystem for opportunities to enhance returns, sure, but also improve efficiency, access new markets. They're not just dipping their toes in anymore. It feels like many are preparing for a much deeper dive.
So as we look ahead, it really makes you think, doesn't it? How will these trends, this increasing institutional involvement and this diversification, how will they ultimately reshape the financial landscape? Could this lead to a more interconnected, maybe more efficient, perhaps even more accessible global financial system? And what new opportunities might this create? Not just for the big institutions leading the charge, but maybe for individual investors like you and the broader economy too. It's definitely a space worth watching very, very closely.